Hello and welcome to my QuickBook training session. In today's lesson, we are going to go around how to record withholding tax and pay that withholding tax. So, there are some services that a contractor or a subcontractor might offer to you, and you definitely have to pay that contractor a fee, but according to the law, you're expected, if it is a company, to some extent, or most times, 10% withhold. If it's an individual, 5%, depends on your country regulation. Okay, now we are receiving a bill or an invoice from your contractor. So it's not actually your employee, it's not on your payroll, but it's offering a service for you that you have to pay. So we are not going to employee section, we are going to vendor. Is a vendor and you are expected to uh, pay. Okay, so the first thing you do is, if you are not paying instantly, you enter the bill. But if you are paying instantly as you are receiving the bill, you go to write check. So in this case, we are receiving the bill without paying, so I'm going to go to enter bills. Now let's say the service rendered was a security service, maybe by a security company. So now let me use uh, someone here, or I can just go as contractor, or add new, then include the name of the company that is offering the security service. So we might say DBM Security. Okay. Uh, okay. That is just that. I can go ahead, click on the OK button. Now we are selecting the expense account. So we are looking for an expense account called security. So if you look over here, if you don't have, you can go straight to add new and expense account. Make sure this is selected, then you continue. Now on this we can include the name, so the security. Okay, now with this security, or whichever name you want to use to track these expenses that you are about to pay for. So in this case, I'm going to make use of security as the name. So when I hit save and close, now we have security on our expense list. Okay, there, how much are we paying for the security? Now before I go ahead, I want to explain the uh what it takes to, why are we doing this. Okay, if you are creating a bill and selecting a vendor, automatically you are crediting that vendor. So that has settled that. So now the entries we are to make on a normal day, if you are creating a bill, or if you are creating a bill to a vendor, is to credit the vendor. That is to show that you are owing that vendor, or you've received an item from that vendor. Then you debit the expense account that relating to the expenses you've incurred on that vendor. So we are crediting the vendor and debiting the expense account. Now, since we are debiting the expense account, the next time we are going to pay, since this is a bill and it means it's an account payable because we are creating a bill, Then we are going to now credit we are going to now debit the DBM security to knock off the other credits that we had initially. Then credit, that is debit the security and credit. But I'm going to explain. I just want us to understand the accounting concept behind this transaction. Okay. Now the posting I meant to say. Now this today's date we select 7th of April. Now the reference number should be the invoice number that you received, the number on the invoice that you received from the vendor. So let's say bill, you can just use bill or invoice 12345, depending on whatever bill number you have. Okay, so now the due date you say is 17, 10 days. Automatically QuickBook select 10 days. But if you have an agreement with the supplier or the vendor on the time for payment, you can create anyone here. If you don't have, like, this is net 15, this is net 30. If it is 30 days you are supposed to pay the vendor, you click on 30 or 15, or on receipt. As you are receiving it, if you click on receipt now, you see it has changed to 7th of April. Okay, so most time you can receipt, and some other time there is number of days that the grace given. Okay, now were we to have this discount, we to have discount 1%, 10 net 30, it means we are giving 30 days grace, but if we pay within 10 days we receive 1%. So if I click on this 1% 10 net, I'm supposed to see like 17th of April here to reflect the 10 days discount date, which is what we have now. Okay, let's just leave that. Okay, let's say net 30, or better off we'll clear that out. Okay, that is just an explanation. So let's use due on receipt. Okay, now the security amount is, now we are going to debit the security. Now you see the bill I told you, while creating a bill, you are automatically crediting the vendor, which is correct, which is indicating that because the it is indicating the account payable is a credit balance account, while account receivable is a debit balance account. So we are crediting bill, which is correct. By creating a bill, we are crediting this security company. Now the corresponding entry goes here. So anything I'm putting now here is debit. So the security, now I'm going to put the total value of the security. So the total value of the security is, let's say, 150,000. Okay, now I can include on the memo payment for, okay, payment for security service received, security service received. Okay, now this is the security fee, which is 150,000. Excuse me. Now we are going to select a withholding. Now if you look at withholding here that we are supposed to select is payable, to indicate that we are supposed to pay a certain amount to the as a withholding to the government to tax. So now if you go over here, I don't have and withholding payable is supposed to be a current liability, because you are withholding this amount you are supposed to pay on this bill to DM security by that 10%. Let's say this is a company limited or something, as a company. Okay, so now 10% of 150,000 is 15,000. So I have to create an item. I have to create an expense. This is an item. I have to create an item to connect it, or I will just go ahead to this account here. So now when I click on, I'll just go to expense tab here. So when I click on add new here, so I want to create an order current liability. So hit continue. Now I'm going to call that withholding payables. Okay, so withholding tax payable. I think it should be that way. Withholding tax payable. So I'll go ahead and hit save and close. So by this time I'm going to include it as minus 15,000. Now you see I'm paying these. Okay, so let's say withholding tax. Okay, so you can just put it that way. Withholding tax on contracts or something. On contract. Okay, hope you understand. So now what happened here is we are debiting, we are crediting the security company with 135,000. Remember I told you anything we enter here is debit. So in order to make sure this does not go to the debit of withholding tax, which is supposed to go to the credit of withholding tax, that's why I had to include the minus sign here. Now giving us a bill for DM security as 135, which is correct because we are withholding 10%. Now the value for security, which is a debit, which is correct because it's an expense account. All expenses account have debit once they are incurred. So we have 150,000, which is correct. But withholding, we are supposed to credit withholding because a liability account is a credit balance account. Whenever they occur, the posting is supposed to go to the credit side, just like it's going to the credit side of DBM security. So now that is why I have to include minus to redirect the posting to the credit side. Okay, now with this I can go ahead and hit save and close. Okay, now save and close. Now another way I can do that is I can actually create an item. Here, then add new, create the item as an order charge item. So when I create as an order charge item, I will link it to the withholding payable account. Like for add new, let me say I add new over here, then I include service, then here I'll link it to the withholding tax payable account. Then I'll name these as withholding tax. Like can just give an abbreviation, withholding okay, I think it's gonna look better, withholding payable, this way, payable. Okay, then if I hit save and close, I can make use of that item withholding payable to link it to the withholding tax liability payable liability account. Now then I will select, and or I can just select the expense and select only security, then come to item and select the withholding tax payable item over here, which is linked to withholding tax payable. Or I can say, okay, let me use item to save to record my transaction. So in that case, I'm going to say, create an item here as also service, then name it security, then link it to security account as an expense account, which is here. So this time around, I'm assuming I'm done with the first one with the withholding. So here I just name that security. Then I'll do same. That is, I'll use the 150 for the security. Then when it comes to the withholding payable, I use a negative amount, and everything will go as smooth as that. Okay, now I hit save and close. Now before going ahead, I have to pull a report so that I will see the effect of this transaction on our balance sheet. Now remember, we created a bill, so if you go to profit and loss, definitely you don't expect that you see anything less. Now if you go to, you remember it's an expense that you incur, which is equity 150. Okay, so let's just that April 7th, so we have 150,000 as expense incurred, which is correct. Now if you go to report, go to company and financial, then go to balance sheet standard. Now okay, as at 7th. Now if you look over here, we are going to check the account payable. Now you see on account payable section, if you double click on that, we are supposed to pay DBM security 135,000, which is correct. Okay, the next one that we are going to open now is still go back to the balance sheet, then look at the withholding payable. Now you see we have a withholding tax payable of 15,000, which is also correct. So with this, we see that it has uh, automatically, it has synchronized, it has did the back end posting to the relevant account. Remember, I use minus while entering withholding tax, which you can see now is on the other current liability section. Okay, now if I were not to include that minus, it is going to show as minus here because you are posting to the debit side. Just like I told you, when you're creating a bill, the vendor name at the vendor section, let me go. Just want us to understand. That's why I'm taking this thoroughly. So now here, this it means you are crediting the vendor. Then here means you are debiting too. But if you want to do otherwise on this section, then you put minus so that it's posed to the credit side, or else it post to the debit side. And if you are posting to the debit side of a liability account, it means negative, it means minus. Okay, that's my point. Okay, now I want to go ahead and make payment. So we might say, okay, let's go to write check because we want to make payment. Now, but if you see here, if you click on um, DBM security, telling you that there are open bills for this vendor action bill. Using the right check window to pay an open bill will cause your account payable balance to be incorrect. Do you know why? Because if you use this bill, you are not. It's possible you include a wrong number. You include a wrong number, and remember I told you if you want to actually pay a bill, you after writing the bill, you go directly with the chart. So you enter the bill, you just go straight to pay the bill. So in this lesson again, I'm trying to tell us that if you enter a bill, you go to pay bill. But if you decide that you want to go through right check and still pay bill, it might still work, but it won't link properly. So we are paying the bill now. You see, paying bill, we select the bill that we are about to pay. You understand, which is 135,000 from which bank. Okay, so you select the banks you have. In this case, I have two banks, negative of course, just for the lesson. So I go ahead and pay selected base. Now once I've paid selected base, now I'm done with that. Okay, now when you go to report, okay, I have them over here. You refresh this. Now we are not going to see the account payable, and that is out. Now the amount is out of the operating account. Now we still have withholding tax payable to pay off to the government. So we are going to make sure we have a vendor that we are making this payment to. So let me go to vendor center. Then we check if we have okay, if we don't have, let me just create new quickly. So I will just put depend on which government authority. If it's an individual withholding, it's going to state. If it is federal, a company, is going to federal. So in Nigeria here, let me say this is a company, so I'm going to FIRS, Federal Inland Revenue Service. Okay, I'll click on OK. Now I'll go ahead. I can make this payment through. Now, if you say you want to pay bill, it's not that is not a bill. This liability we are seeing here is not a bill, so we don't pay bill. We don't use pay bill function. What if we say we want to make use of write check? For instance, I want to write check. Now you are going to select who you are paying in favor of, which is the FIRS. Is that not so? But now when you come to the expense account, if you are going to include that item here, which is the security, okay, we did not create that. Now you see there is no room for you to make this payment over here. Neither is it there's any room for you to make that payment over here. So even though we created an item initially and linked it to that withholding tax payable, we cannot still come to write check to pay. Why? Because if you are doing that, it means you are entering another transaction again. That is a double transaction. So what I suggest we do in this case is to go ahead to make general donor entries, and over here I'll select the uh, the withholding tax payable, which is correct. Do you know why? Because we are debiting. It means we are reducing. It's a liability account. Liability account is supposed to be a credit account, but this time around I'm going to debit it with 15,000, then add being payment, or can say payment for tax withheld. I did not get the spelling correct. Okay, now I will definitely have to select who I'm paying in favor of, because if I do not do that, it will ask. So I'm paying this to FIRS as the vendor. Now I'll select the bank account I'm making this payment from, which is also 15,000. Now you can see I'm crediting the bank account and debiting that withholding tax. Now, sorry for my simplicity, I still want to explain something. Now, if you go to the balance sheet here, the figure you are seeing 15,000 is on the credit side of withholding tax payable. But now you are debiting here now. It means you are knocking off that 15,000. So this one will now disappear, return to zero. Okay, now you are crediting the bank account definitely to pay that for that transaction. So I'll go ahead and hit save and close. Then we check our balance sheet to see if we are having any withholding tax payable, which is we don't have. You can see. Then because we have a negative balance, it has also increased again because it's a negative by that amount. It's supposed to reduce anyway, but since it's negative, we're still that guy is coming up. Okay, now you can see we've been able to create a record withholding tax payable on QuickBooks, and also shows how those transactions affect the financials, profit or loss, and the balance sheet. Similarly, we've been able to see how the payments were made, how the postings were done. So in all, we kind of teach the accounting and also the bookkeeping aspects. If you guys enjoy this lesson, you can like my video. If you have any section, drop it on the comment section. If you have any question, drop it on the comment section below. Please share my videos, subscribe to my YouTube channel, and turn on the notification so that whenever I make new videos, you get notified first hand. If you have any video you want me to also create and work on, you can go ahead. Now, if you need a bookkeeping and accounting services, if you want to do a cleanup, if you want to import or migrate to an accounting software, QuickBooks accounting software from maybe Excel, or you are in desktop, you want to convert to online, or you are online, you want to convert to desktop accounting, feel free to reach out, and we are definitely going to offer you the best service needed. Hope to see you guys in my next video, and do have a nice and lovely day.